Today we'll be talking about crypto futures and crypto options. What are they and how do they differ? In this day and age, crypto derivatives trading is getting increasingly common and popular. Crypto futures and crypto options are classified as different types of derivatives in the market, and while they both involve the buying and selling of crypto assets in the future, there are slight distinctions between the two. So let's start by breaking down what are crypto futures. In the market, crypto futures are sort of a derivative trading contract in which two consent to purchase or sell a cryptocurrency at a certain price level in the future. They enable traders to obtain access to specific cryptocurrencies without having to purchase them first. So, examples of using crypto futures. If the current price of Bitcoin is at $50,000, an investor may either buy or sell future contracts in anticipation of either a price decline or an increase. If a buyer purchases a future contract worth 1 Bitcoin, which is $50,000, and it increases to $60,000 by the time the contract closes, the buyer will have realized a $10,000 in profit. If the price drops to $40,000, the buyer will incur a loss of $10,000. So next, let's break down what are crypto options. Crypto options are also a sort of derivative trading contract that gives the trader the freedom to purchase or sell the underlying cryptocurrency at a preset price level on or before a specific time period. While crypto options give traders the option to purchase the underlying asset, if the price of the underlying asset goes against them, they are not obligated to buy the asset. So it's worth noting that options are not a completely risk-free method of trading crypto derivatives. So next, let's talk about the types of crypto options. So firstly, we have call, which is the right to buy an underlying asset, and secondly, we have put, the right to sell an underlying asset. Here are some examples of using crypto options. So let's say you want to buy a call option for Bitcoin at the strike price of $60,000 with the current price at $50,000. If Bitcoin were to fall to $40,000, you do not have to bear the $10,000 loss. You just have to pay the option premium. If Bitcoin instead rises to $70,000, your profit will be at the current price deducting your strike price and the option premium. So, what is the difference between crypto futures and crypto options? In summary, here are some key differences between crypto futures and options. For futures, there is an obligation to buy and sell the options contract at the strike price on an expiry date. There is a relatively higher risk, but there's no limit on your profit or loss. Whereas for options, you have a right to buy or sell the contract at the strike price on or before the expiry date without any obligation. Your risk is limited to the premium amount, and only a small premium amount needs to be paid upfront before the contract activates. And there are also high profits but limited loss. So, which is better, crypto futures or crypto options? Crypto futures are performed at a fixed price and time period. Therefore, there is no time erosion, as opposed to crypto options which suffer from time erosion. With this, crypto options has the tendency to become less attractive as the expiry date approaches. It is also not necessary to pay a premium before the futures contract is issued, which significantly reduces your expenditures. On the other hand, those who are keen to trade crypto options must pay an upfront premium to the seller. However, this can be beneficial as it also implies that a buyer is committed to purchase the underlying asset when it is most lucrative to do so. Meanwhile, futures contracts do not provide such a benefit. In addition, crypto futures market is larger when compared to the crypto options market. This means that crypto futures market has more liquidity, which equates to tighter spreads for traders. So, in conclusion, comparing crypto futures with crypto options is akin to comparing apples to oranges. They both have pros and cons, but the most crucial factor to take into account is which suit your preferences and fits your trading strategy the best. And with that, we've come to the end of the video. As always, thank you so much for watching. If you liked it, make sure to hit that thumbs up button, subscribe to us if you haven't, and make sure to hit that notification bell to always stay up to date on our latest video. Thank you for watching, and we'll see you in the next one.